Okay, we just started streaming.
All right, going live.
Recording now.
Live.
We are on YouTube. The YouTubes. We are on the tubes. Are we on the Grams? Are we on the
Chris and Lee back at it again.
TikToks? Are we on the TikToks? Dude.
We're on the TikTok,
Great.
the IG, the Facebook.
Yeah, we need to wait. We
the
need to wait because we got some really good news. Like really good news. Can you believe that? And I got some other stuff too. I'm going to tell you in a little bit. But it's really good news. Let's wait till some people. Dude, you didn't put yours on D&D. What the heck? Dude, there's some really good news going on here. It's amazing for the people that are trying to buy a house in the place we call America. America!
F yeah.
Wow. I don't have to cuss or anything.
I didn't cuss.
You said F yeah.
Yeah, it's a letter. I can also say K yeah.
Great news, man. Stupor. Not, it's stupid.
Wow,
great
man.
news. Stupor.
See that cup right there? Pound it.
Yeah. Pound it. I need some caffeine, baby. Let's get some caffeine in the house. What we got in the house? Great news today.
Kayvon.
Like great news. You won't believe what interest rates are down at. You will not believe. What we get? 5?
Navy Mom.
8.75?
5.7.
What?
5.75.
7.5? No way. What's up,
Connor?
What's up, Connor? Hey, the Fed meeting notes just came out last night. That's a big deal because there's a lot of people on the Federal Reserve Board, and the guy who speaks, his name is Jerome Powell, but he doesn't like run it. He's not one guy who owns the thing. There's a whole bunch of people, and they're all kind of important people. So there's a way of looking at things called hawkish and dovish. Hawkish means we think it's going up. Dovish means we think it's going down. So when they take the poll of all the people on the Federal Reserve on the board, they see if are you hawkish or are you dovish? Are you hawkish or are you dovish?
Hold on, Connor.
Dude.
Clear it up because I got confused when he said it too.
Dude. No,
Connor, he'll clear it up.
No. I'm going to clear it up, man. We're just waiting till the viewership goes up a little bit. We know this gets rebroadcast. We're going to send it out there, but it's really great news. Like today is 11/29/23, and for the first time in, how long? A year or longer? It's probably longer. Well, rates have gone down. It's really good news. Like really good news. So there's hawkish, which means you think the interest rates are going to go higher, hawkish. And then there's dovish, which means you think rates are going to go lower. Now, chairman of the Federal Reserve, his name is Jerome Powell. He's the one who's like the spokesperson. He speaks on behalf of, I can't even find him, man. Dude, I lost Jerome.
What are you going to do? I'm going
to show him who Jerome Powell is.
No, what are you going to do in the meanwhile when you can't find him?
I can't find him. What are you going to do? Who are you going to call? Ghostbusters. That's who you're going to call. So Jerome Powell gets to speak. Okay, here's him. And he's the one, he comes out on the news and he says, hey, this is what's happening in the Federal Reserve. But it's not just his decision. There's a whole board of people. Those are old days. Those are gone,
old
man.
days.
That's like last month's rent. That's gone. Anyway, so the Fed meetings came out. And the guys on the board who were hawkish have started to talk dovish. That's a big deal because once all of them are on board with, hey, we think rates need to be lower, then they start dropping the interest rates.
All right, look now, what Miguel said.
I heard, what did Miguel say?
10-year bond is at 4.2.
Would drop more. See, 10-year, Miguel's got it. He's looking at this. Well, every morning we come in and we pull the New American Funding price. Every morning we price what's on the website because everybody's interest rate is going to be unique to them. But today, we usually come in and it's 6.125, 6.125 for probably the last 10 days. 6.125 is way better than it's been. It's been in the 8s. So we're just happy with 6.125. But then this morning, after the Fed notes came out yesterday, the bond market reacted immediately. And what Miguel said, boom, bonds dropped. 10-year, it's actually yields. The 10-year yield dropped significantly. Almost immediately, all the lenders start to respond. Boom, 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 boom. But it's because all the hawkish members on the Federal Reserve are all starting to get in the same tune of going, I think we got this thing under control. I think we're done with this, and then we'll be in the pause. Now, we pulled the rates this morning. You're not going to believe this. Tell them.
Connor, are you paying attention?
Connor, pay attention.
5.75. We're in the fives.
5.75. Now, let me tell you what that means. Let's say you made 100 grand a year. 100 grand a year, and you had no debt. This is no debt. 100 grand a year. 100 grand a year at 8% will get you maybe 420,000. Maybe 420. 100 grand a year at 8%. Maybe 420. Maybe. At 5.75, 100 grand a year will get you 550 to 600,000. Crazy
Impressive.
Numbers. Crazy numbers. So, this is really good news. Now, there is some not so great news in this. Not so great news. When the Fed notes came out, and this is all public. These people all work for us. So when the Fed notes came out, they said we might be in a good situation that we just have to watch for the next 4, 5, 6, or 7 months. That's what they said in the notes.
8, 9, 10.
That's what they said in the notes. 4, 5, 6, or 7 months. So, what does this mean? This means that we've kind of hit, I believe, we've hit kind of a level. It's a level situation where we can actually start to get a decent, stable market. Once we get a stable market, interest rates will be in the fives. They're in the fives right now. 5.75. Now, luckily we didn't lock anything yesterday because we'd be regretting it today. Today, like yesterday was 6.125 on the website. Today, 5.75 on the, it didn't go to 6.875. I'm sorry, 5.875. It skipped all the way down to 5.75. Crazy. Shout out to the girl who reads the comments on your page. Appreciate that. We dig it. Thank you very much. Terry Garcia. Like that. Did I say that right? Garcia? Yeah. What's up, Terry? So, wherever you guys are at in the country, let us know. City, state. City, state.
Got a question. Navy Mom says, please clarify what you said about not getting mortgage insurance. Why I am paying for it.
Why I am paying for it. Well, why I am paying for it. Okay, so good question. Mortgage insurance, all loans in the mortgage industry are based off of debt. So, they're worried about you defaulting on the loan. There's a certain spot where they stop worrying. And that's when you're 80% loan to value. 80% loan to value. So, if you come in with 20% down, I'm talking about conventional loans. If you come in with 20% down, they're not worried about you defaulting on the loan because you have so much skin in the game. So, if you come in with 80% down, you don't need to buy mortgage insurance. There's no mortgage insurance. Mortgage insurance insures the lender against the borrower's default. Now, not everybody can come in with 20%. So the lenders universally say, hey, if you don't come in, I need some kind of insurance. You can come in with 10% or 5%, even 3%. But I need some kind of insurance in the event that you default on the loan, I'm covered. So when you take out the loan, you are forced to buy mortgage insurance. You're forced to, or else they won't give you a loan. It's pretty simple.
Shows that we froze.
We froze? Okay. So, I can't see anything. Oh, dude. Let me see if I can. Should I restart it? Stop it and restart it? Dude,
Yeah, I
know
think we
it
have to.
sucks.
I think we have to.
So let's.
We'll get back to you guys. If you can hear us, we're going to restart. For you on Instagram, for you on, what's up, Mortgage and Co.
Keep going. We're still there. We're still live on
Facebook,
we're still
YouTube,
live.
we're still good.
No internet.
So don't even worry, guys. We're still good. So here's something that I wanted to touch on. So, Terry, you can't see me because you're off of Instagram.
Go to Instagram. Everyone on TikTok, go to Instagram. Oh, they can't hear us.
I was just going to answer her question.
They can't hear us.
But,
But
why?
you know what? We're still answering the question. Finish up what I was talking about mortgage insurance.
Okay, so if you're putting less than 20% down, the risk increases drastically for the bank. So the bank says you have to purchase outside insurance to cover that risk. Because once you put 20% down, something weird happens in a person's mind. They feel that they have so much invested into this property that they're going to do whatever it takes to continue making mortgage payments. So when you don't have mortgage insurance, and if you were to default, the bank would have to eat all that risk. So since they know the probability gets higher, they make you buy insurance so that if it does happen, the bank is covered. Not you, but the bank. But once you've paid your loan down far enough, once you've paid it down 22% from where you originally purchased, not your equity, just from where you originally purchased, you can then request to get the mortgage insurance removed. So all you got to do is contact your lender, tell them that you should be at 78% LTV, that's loan to value, and you want the mortgage insurance removed. If you're conventional, you can do that. FHA, if you have an FHA loan, FHA is for life if you received the loan, I think, after 2014. Prior to 2014, it was only on for a certain period of time. After 2014, I believe that's the date. I think it was January. It's for life. So you're going to have it forever as long as you have that loan. But let's talk about statistics, guys. It's statistics. If you have a loan, statistically, you're going to make a change to it in 5 to 7 years. Whether you sell the house, refinance the house, take money out, pay for your kid's college fund, move. There's a lot of things that are going to happen. So when a person gets a mortgage, don't think you're going to have it forever. You're not going to have it forever. And those of you that got mortgages in the 8s, 7s, 6s, you're not going to have those forever. You're going to get rid of those in the next year. I'm pretty confident of it. By the end of next year, maybe beginning of 2025, you're going to get out of that. Eric Sosa, what's up, my man? Remember Sosa?
Oh, yeah, I remember Sosa. Shoot, we started our careers together. Shoot, that was, how long ago was that? Dude, that was a long-ass time ago.
Long-ass time ago.
Yeah, it's a long-ass time ago.
So that's about it. That's your gist when it comes to mortgage insurance. But yes, interest rates have hit the 5s. We're looking at 5.75 for VA, 5.75 for FHA, 5.75 for 15-year. The only one that's a little bit different right now, the one that's off, is your 30-year fixed conventional, 6.620. 620. Yeah.
620. Wow.
It's a pretty big spread between the two. So you do have mortgage insurance FHA, but you have a much better rate FHA. Because a lot of people think, well, I want to get rid of that mortgage insurance. I need to get conventional. You can have it, but your payment may be higher because the rate innately is higher. And then if you're going with less than 20% down, your rate's higher, and then you have mortgage insurance. So not always the best bet, but we'll rerun all the scenarios to figure out what's best for you and your family. Are we back here?
Yeah, we're back. I think we're back. Are
All
we
right.
back? Okay, if you're on TikTok and we had a little hiccup issue, something, blah, 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 let us know. Say hi, say where you're from, city, state, whether or not you want to buy. What did you know interest rates are at 5.75 today on the New American Funding website? 5.75%. Crazy. We lost all our viewers, man. We had droves of viewers. We can't keep up with all the questions. Now we're back down to whatever we got. So we appreciate you guys. 5.75%. Now, what the industry experts have been predicting is starting to happen. Have mortgage applications gone up from your desk?
Drastically.
Amazing. I'm getting
Drastically.
so many people and so many weird scenarios. And I'm like, yeah, that we could make that happen. Can make that happen. But here's the catch. When you're going for a mortgage, especially now that we're in the 5s again, we're in the 5.75 today. 5.75 on the New American Funding website. That's because the bonds dropped dramatically this morning. Big time. Dropped big time. And why? Because the Fed notes came out yesterday, and most of the Fed board members, even the grumpy ones, those guys are like, yeah, I think we're kind of not going to raise anymore, but we could. But we're probably kind of not going to, but we could. That's kind of what they said. We're kind of not going to, but we could.
I wonder if how much of this is a game to them. I mean, the people that are actually making the decisions, the people that are actually, doing the things with our financial system.
Yep.
I wonder if they're at home going, let me see how far I can push this. It doesn't really affect them too much. I don't know that for sure, but let's pretend that it didn't. So if it doesn't, I wonder if they're going, let's see how much fun we can have with these Americans. Let's see how many jobs we can create. Let's see how many we can take away. Let's see how many we can put in foreclosure. Let's see how many we can save. Let's see, you know what I mean?
Dude, I think that happens, and I think it happens even in war.
It's ugly.
It's a very ugly, like the guys at the top of war, the politicians, the ones who never served, who never put their life on the line.
They're like, let's start another
Yeah,
war.
they're like, hey, let's see.
Like it's a video game, right?
So yeah, it's like a video game.
Yeah.
It's like, hey, there will be some collateral damage. We'll probably lose about 27 soldiers. And to them, it's just a number because it's not their kids.
Yeah.
It's crazy when that happens.
Yeah.
And I think this is happening in the mortgage business, but I do think that there's a bigger picture where that is a necessary evil.
Sosa, back in
Sosa.
the chat. He says
which is he?
OGWCC. He's on Facebook.
Oh, dude.
Talk new loan limits.
Why haven't the IE followed? Why hasn't the IE
So
followed?
loan limits.
Yeah.
What are loan limits? Let's talk about that first,
Okay.
okay? So every loan type, whether it's conventional, FHA, VA, yada, 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 they all have a limit. What that means is that's the most amount of money that you can borrow, and it's different county to county, okay? And every single year they readjust. And because of inflation and all the things that are happening, they usually go up. They don't always skyrocket. They don't always go up a little bit. You know, it's always all over the place.
Jay Viss, I see you. We're going to answer. Finish.
But for the most part, they go up every single year. And all it is that's the most amount of money you can borrow. And then your down payment can go above that. And that's how much purchase price max you could potentially have. But as far as loan limits are concerned, I don't know them off the top of my head because every single year they come out brand new. And you got to remember them. And they just came out the other day.
Yeah,
What is it?
FHFH. I think it came in 744,000.
So Fannie Freddie.
FHFA, yeah, Fannie Freddie. So Jay Viss, I made 52K last year. And this year, 80K, no debt, credit score 730. Well, I got great news for you, Javis. Like, unbelievably, really good news. First off, if you'd have done this 2 months ago, rates were in the high 7s and 8s. We were actually quoting 8s, all the time quoting 8s. It sucks to quote 8s. The interest rate really affects your buying power. Not a little bit, a lot. So this morning is the lowest they've been in probably a year and a half, maybe 2 years.
Yeah, year and a half.
It's probably a year and a half. It's the lowest they've been. We actually went to the New American Funding website, and that's the quote that they put out to the world. It's not your quote. We have to build your file to give you your quote. But the quote that they're putting out to the world is 5.75. 5.75. We haven't seen fives in a year and a half. And they've been in the 8s, and it's been hurting. It's been hurting a lot of people. Well, what happened yesterday was the minutes from the Federal Reserve meeting came out, and they get to see what everybody said. And after they seen all the board members talk, they're like, these guys are pretty dovish. Dovish means they want to go down. Hawkish means they want to go up. So these guys are all pretty dovish. Now, once all of the Fed members agree, then they set the policy. This guy is the guy who comes out and talks. But he's not the only guy. There's a whole bunch of people. Anyway, they came out and they said, hey, we think we're done raising interest rates. We could do it again, but we think we're done and we think things are responding, but we could do it again. But we think we're done and things are looking pretty good. Even the grumpy guys, the guys are like, no, we're not. We're going to stay high forever. Those guys even came out going, well, I think we stayed high long enough. And because of that, this morning, the bond market reacted. Boom! Bond market, down. Now, mortgage rates are based off of the 10-year yield. It's the yield, not the bond. The 30 years the bond. But the 10-year yield. And when the 10-year yield went down, mortgage rates went down. And banks respond fast. I mean, they respond fast. So this morning, we went to price it. Before we go live, we price everything real quick. And we came in with I told Chris, I go, 6.125 again? And he goes, no, dude. No, we're in the fives. And I'm like, no, we cracked 5.99? And he said, no. Tell me.
5.75.
On the website, 5.75%. This is the lowest they have been in a year and a half at least. Now, what that means is that all the people that were on the sidelines, they're going to start coming in, and they're going to start coming at like fast gangbusters. So this is, if you follow history, trends, and you track this stuff, the closest this one looks like is the 80s. The 80s, this happened, and there was this magic point where things just, the housing values went down. Mortgage applications went down, but they didn't crash. But as soon as the rates went down, this little spike happened, and then it went, whoo! Housing prices skyrocketed. This is the 80s. There's one chart. I'll actually probably pull it up in one of our lives here coming up soon. But this happened in the 80s. What that means to you is that if you're going to buy and you follow that chart, right now is the sweet spot. Right now. I don't know when the spike happens, but I know that interest rates are starting to come down like a lot. A lot. And then there's more, something more came out real big in this meeting. And I have to pull the notes so I can give you the exact quote. But they believe they're going to go down 275 basis points in 2024. Now, what that means, this is kind of difficult to wrap your head around. 25 basis points is 1%, broken up to 100, that's a basis point, so 25. Usually they raise or drop in quarters. They don't do much more than a quarter usually, because it'll drastically move the market. 275, that's 11 moves. There's only 8 Fed meetings. What? That means there's going to be a drastic move in one of those meetings.
Now, that's a little bit of a bummer to me. Here's why.
Tell me why.
Here's why. Because of all the millions of viewers that we have,
Yep. I know, dude. We're burning up. The reason we keep losing internet
of all the
is the bandwidth can't take it.
That's what it is.
Yeah.
Too many viewers.
Yeah, too many viewers.
So what they're thinking is, oh, they're coming down.
Dude, on a side note, you ever see the pretty girls when they're doing a live and there's like 2,300? And they're like, I'd really like to get up to 5,000. I'm like, yeah. Anyway, back to us.
Yeah, we're not that.
We're not pretty girls. Sorry.
I'm not.
No. So
they're thinking, hey, this thing's going down. Lee just said that in 2024 it's going to go down really far. So let's wait until the end of 2024 to see if we qualify.
yeah.
What's the problem with that?
The problem with that is you are in line with everybody else. Like everybody. Now, I want you to think of this. So let's just say you knew that this was about to come and you knew that, hey, maybe I should stock up on toilet paper. Maybe I should stock up
You
on
know
toilet
what's funny about that? Let me expand on that.
No,
now we're going to get lost.
I know, we're going to get lost, but it's okay.
But here's the thing.
5.75 rates. Just keep that up there.
So-
we don't want to lose the audience, dude. We don't want to lose it. We got millions. We're burning up the bandwidth. Go ahead.
So here's what's funny is that when the
yeah.
came out, the everyone was going for toilet paper, and there was a buzz going out saying, "Oh, this flu gives you diarrhea."
I know. What? What? Okay,
No,
now,
it didn't.
Did you go to Costco during that time?
Yeah, of
I
course,
did.
of course.
Did you see the
Masks,
toilet paper?
gloves.
Did you see the toilet paper? It was going away like crazy.
Oh, yeah.
And I was sitting there going, I don't get this, but I probably should get some.
You know, yeah, me too.
Like a dumbass.
And you know
right?
what's even funnier?
Like a
is that if
dumbass.
you go to your local Costco
Uh-huh.
and the stacks of water, because water was a problem too. Stacks of water just gone. But if you go down,
5.75 rates. Sorry.
but if you go down the street
Yeah.
to the Costco, what is it, the business center,
Yeah,
which
yeah,
everyone
yeah.
has access
Yeah,
to,
yeah.
they have all of it.
It was all the toilet
All
paper.
of
All
it.
the toilet paper. So there's this one guy we follow. I don't think he's around anymore, but we thank him for because that's what he taught. You know, that's Lou, right? Lou taught us that.
Oh, did he?
Yeah, Lou V. Wall Street. Anyway, rates 5.75 this morning. 5.75 this morning. So to put that in terms that like you can pallet. So if you earned $100,000, $100,000 in the eights, and that was only like 2 weeks ago, $100,000. If you earned $100,000 in the eights, you were maybe 420,000, maybe 410, 420, depending on your debt. So $100,000 would only get you a $410,000 to $420,000 house, no debt. Now $100,000, $550,000 to $600,000. That's the difference. It's gigantic. It's ginormous. It's unbelievable how much those rates. And the reason is the Federal Reserve spoke, and this guy came out and he said, "Hey, well, we're not sure, but we might raise the rates again, and we might not, and we might raise them, and we might not, we might raise them." So there's a 95 or 98% chance that they're not going to raise them in the December 13th meeting, which means there's some stability, but that's not the only thing that goes on. What happens is they have this big meeting and there's all these board members and there's the ones that are like, hey, we should bring down the economy so people can have jobs and eat again. and those are the the nice guys. And then there's the grumpy guys who go like, no, we are not going to bring down the economy. I'm very grumpy this month in my $100 million home, so I think the peasants should be suffering. I'm not sure that's exactly what they say, but if they do say that, these guys are not as grumpy. They're getting the Christmas spirit. They're like, perhaps the peasants do deserve a little bit of relief. So maybe we're done raising the interest rates. We're not saying we are. We could raise them again, but maybe we're done. Now, after we read all the notes, then the market responded this morning. The bond market, boom, went down. Boom. And as soon as the bond market goes down, the mortgage rate go down. Boom. Usually there's about 1.5 points between the 10-year yield and the mortgage interest rates. About 1.5 points. When there's uncertainty, which there has been for the last 6 months to a year, the uncertainty expands that. So there was a 2.5 point difference for a while from the 10-year yield to the mortgage rates. But as we gain certainty, the spread goes away and we see 5.75%. What that means to you buying a house, is you can buy a lot more house, and qualified a lot easier, a whole lot easier. Go ahead.
Let's get to the questions.
Cool.
Curtis Howard, credit score is 571. Look at 200K, house in PA, make 60K a year with the car payment of 360. Can help. Maybe. Depends on how much you have saved. Here's the why.
Yeah.
Is if you want to go minimum down payment FHA, I need a 580 or better. So you have a 571. As long as you have a little bit more money than that, probably. So you're going to have to give us a call. And I know everyone's going to be asking for this. So do me a favor, guys. Screenshot this. Text us. Whatever platform you're on, just text that platform name. We'll get back to you when we're done. I know our inboxes are going to be lit up after this, so please be patient with us. Rates are at 5.75 when it comes to VA, 5.75 when it comes to FHA.
What he said.
6.6 when it comes to conventional, but most people are going to get FHA.
Dude, 5.75. And by the way, we get thrown in jail every once in a while. You can follow us on all of these platforms, all of them. All of them. Did I say all of them? All of them. Same @ symbol.
Javis, how much house can I afford, or can I try to buy one now, or do I have to wait for tax season?
Javis, I'm gonna tell you something, man, or woman, whichever you are, or I don't know. I'm gonna say that stuff. I get in trouble with that shit all the time. So Javis, you got to make moves now. Because if you wait, which most people have done, if you wait, you're gonna be like the guys trying to get toilet paper at Costco during the. You're gonna be those guys. You're just gonna be like, I want it. There's too many people here. I'll pay more money for it. That's what happens in the real estate market. And now that we're in the fives, we're already seeing a massive increase in applications. So many different scenarios, so many strange situations, and a lot of people who don't get life. Like I got one guy who called me yesterday. He's like, hey, I'm going to be funding with Bank of America. Can you tell Bank of America how to title my loan? I'm like, you want me to tell Bank of America how to vest your property? And he's like, yeah, can you tell him? I'm like, I don't think you understand how this works. You should call your loan officer at Bank of America, and they will help you. I get it. Thank you for the compliment. You know that I'm the expert trusted advisor, but I'm the expert trusted advisor when I'm doing your loan. I mean, if you've got a guy that you chose, good for you. Good. I hope you fund it. I hope you get a house. But this guy should be watching you every step of the way. Strange things like that coming up.
Yeah.
Cool.
User,
yes.
Can you explain the new conventional 5% down payment guideline for multifamily homes?
Boom. User 506. Go ahead.
Okay, so it's only up to 4 unit. Okay, you can only go up to 4 unit. It's 5% down. Need a 620 or better FICO score, 2 years work history. So it's basically the same as the regular 5% conventional. And to be honest with you guys, this isn't special to me. I mean, we've had this opportunity for many people to be able to do this with FHA for many years.
Yeah.
Because it is for primary residents. You have to live in one of the units. So it's okay. But if it fits your exact scenario, which I know a couple that it'll fit into, but it's not really that special. But if you are interested in getting pre-qualified, make sure you call us.
Yeah, what are the rates now? Dude, we pulled the rates this morning. I said, Chris, is it 6.125 again? And he goes, no, dude, we're in the fives. And I go, we cracked 5.99? And he said, no, dude. I said, no way, 5.875? And he said, No. I said, wait a minute. What is it? He says 5.75 on the website this morning. I said, no shit. No shit. Sorry, I don't know if I can cuss. Is shit cussing?
No, I think shit.
I know we get banned every
it's
once
on
in
the
a
ground
while.
and I step on it every now and again.
We get banned. We get banned. If we get banned, you should follow us on all our platforms. Sometimes we're bad boys, bad boys. What you gonna do? What you gonna do when they come for you? That's us. We get banned. We've actually been, you can't go live anymore. So that happens from time to time. Make sure you follow us across all platforms. We love TikTok. We love Instagram. We love YouTube and we love Facebook. We love all you guys. But if y'all don't want us, we'll go somewhere else. We love all you guys. We love all you. 5.75. There is going to be a drove of people walking in. What? Are you laughing at?
You're so afraid of silence. It's not even funny. There's silence. Danny, I'm trying to buy a house in a trust. Closing was supposed to be tomorrow. It keeps getting pushed. I don't know what to tell you, bud.
Yeah.
Should have gave us a call earlier. We'll be able to solve that for you. So what's the problem? Give us some more detail.
Yeah, give him more detail.
Becky, yes he did.
Yes,
Becky.
he did. Oh, no, he didn't. Oh, yes, he did.
I got Becky with the good hair?
Yeah.
I got laid off when I started maternity leave. How long do I have before I have to get a new job?
Ooh, Becky, sounds like you got a lawsuit ready.
Yeah, your
sounds like
employer seems
you're about to be
mad.
rich. You're about to be rich.
She's big mad.
Hey, yeah, you big man? Well, you big man. Well, there's something called the, I think is that the Disabilities Act? No.
I've never been pregnant.
You've never been pregnant?
Have you?
No.
All
So
right, then.
anyway, so there's a Family Leave Act. That's what it is. FLA. Family Leave Act. If you take the Family Leave Act, they can't fire you. It's
FMLA?
illegal. Yeah, FMLA.
Oh.
They can't. They can't fire you. Not legally. They can't. And they have to hold your job for you. And so if they fired you, that's something. But if you took the Family Medical Leave Act and you did it for the extent, let's just say you took a 6-month version, 6 months. Well, the minute you go back, I can count that time as you were working. If you found another job and you went from FMLA to the new job, I can count that time as if you were working. So it's a unique situation, but you got the law on your side as long as you did it correctly. So if you did it correctly, we want to help you. Even if you didn't, we'll still help you.
Javis, stop with the
Javis.
feelings, man. Stop with the emotion.
Javis, okay.
We probably did answer your question, and if we didn't, ask it
Javis,
again.
you
We'll
didn't
answer
even
it.
answer a question. He's crying. Hey, Javis, don't cry, man. Don't cry. This is an adult world. Sometimes life goes your way.
I'm a material girl in a material world.
Sometimes life doesn't go your way.
Geneva.
That's what happens.
Credit
Cool.
score is 550, and I want to use my VA.
Oh, Geneva. Oh,
Take
you
this.
are in luck today. If you were saying, hey, I want to do conventional, I would say, Geneva, you're out of luck. If you wanted to go Fannie Mae, out of luck. Freddie Mac, out of luck. Any loan officer knows I just said the same thing. But if you wanted to go conventional, out of luck. If you wanted to go FHA, I would say, Geneva, you need a lot of money. But if you want to go VA doesn't even care about your FICO score.
VA all day.
VA all day long. Whoa, we got fireworks, dude. Fireworks. Thank you for the fireworks. We appreciate you. So VA doesn't care about your FICO score. Now, there's a reason you're at a lower FICO score, so we have to address that. But VA is what's called residual driven. Here's why. The VA steps in and says, hey, if this veteran defaults on the loan, we will cover up to 25% of the damages. So if you got a $400,000 house, they're insuring $100,000. Now, if they have to foreclose, there's going to be costs. Let's say it's $50,000 to foreclose. The VA will pay the $50,000. The bank's not out anything. So because of that, it's a very, very, very liberal loan. Very easy to underwrite. Go ahead.
So what does she need to do?
Just call us. Just call. By the way, I'm a veteran. My dad's Vietnam veteran. My son's active duty military. We're all family of veterans. I help a lot of veterans. I would love to help you. Call us.
What's a good DTI to get approved? Asked DVNNY. I thought that was Danny, but it's Devini.
Divini. Okay.
Good
What's
DTI?
a DTI? DTI stands for debt to income. And a good one is probably 2430. That's probably a good one. But where we can go is up to 55.999, right?
Yeah, all day long.
55.999. What that means is your debt to income ratio, let's say you make $10,000 a month. Well, 55.999 is $5,599.99 can go to your PITI, principal, interest, taxes, and insurance, and revolving debt. So, as long as we pay all the bills, we can get it done with the 55.99999.
Boom. Yeah. Adam, why do I need a mortgage? You don't.
You don't, dude. If you got cash, I want to party at your place.
Yeah, 114
Are
scores.
you buying
no
the beers? Don't buy cheap beer though.
What's not cheap beer?
Dude,
name a good one.
A good one?
Yeah.
Sierra Nevada, dude.
No, I said a good one.
I'm not talking anymore.
Still waiting.
Not talking to you.
Can I get an FHA loan with 1.5 or so with a credit score of 114?
Evan, you need a little bit of education, so that's what we're here for. Okay? A little bit of education, okay? Credit scores for FICO do not go down to 114. The lowest they go to is about 350.
Yep.
350, right? 350. The highest they go to is about, I think it's
50.
850? Okay. So I think FICO's a little different than that. But anyway, 350 to 850.
Don't think.
So if you have a 114 FICO, 114, you probably don't know your FICO score. So we got to pull your FICO. That's it. You don't need to know it. If you're a welder, shit, you do things that in welding I won't know about, that's for sure. When it comes to lending, there's probably things you don't know about that I know, and that's my job. So just call us. We'll help you out. Sandra, followed the host. Thank you, Sandra. FHA. Good. Triplex.
Blake Val, FHA for triplex with 680 FICO. Yeah, we can do that.
All day long, dude.
We actually just qualified one of those earlier this week.
Yep.
Can a married couple get 2 different loans?
Kia.
Yes, they can.
Kia. Yes, they can.
Zach, how do I get my FICO score? Well, there's a number of different ways. The most popular way that people are doing it right now is through Credit Karma or through their credit card apps.
Don't do that.
Or multiple. No, I'm not going to say don't do that. But here's what I'm going to explain.
I'm going to say
you.
don't do it.
He's going to tell you not to, but I'm going to explain it. So here's what I'm going to explain.
Okay.
So those FICO scores are using the FICO Model 8, which are geared towards credit cards.
Ooh, fancy.
The mortgage
fancy.
is FICO score 5.
Ooh, fancier.
Most of these simulators don't give you that data.
Dude, fancy.
They don't give you that data. And that's only for mortgage. Well, it might be for other things too, but that's what we use in mortgage for the most part. So in order to know your credit score, if you're really interested in buying a house, it's not going to cost you anything and it's not going to impact you negatively. Give us a call.
5.75. I can't be more excited about that. What it means for the world is they're going to be able to buy a house. What it means for a lot of my friends in lending and real estate is they'll be able to put some food on the table in January or February.
Yeah.
Not till January, February.
B9ER60 VA loan, 110K a year, no debt. How much house can I afford? Lee, what do you think?
How much house? 110K with the VA?
With these new rates, man, with these 5.75s.
With a VA, shoot. If I went to that, I'm probably somewhere in that range, you think? Somewhere in that range? 110, 110,
Yeah, maybe.
110? So I'm going to say 575 to 625.
Yeah.
Somewhere in that range. 575 to 625 with a
gone
VA.
up a lot.
A VA, by the way, VA, no back end ratio. So strange. I've done a VA loan with 72% back end ratio. 72%. It was crazy, but it was a big, the guy made a lot of money and it was a big loan. So he can afford it. So VA is a whole different animal. It's awesome. I'm going to say 575 to 625 in that range. Maybe more. Call me. Let's get it going.
Moo
Moo.
How long do you have to be on the job to qualify? How long do you have to be on a job to qualify for FHA? So your new job, one paycheck stub. Your new job, one paycheck stub. But you need 2 years history. So let's just say that you worked at Wiener Schnitzel for 2 years.
Say that again.
Wiener Schnitzel for 2 years. Did I say it wrong?
I know it sounded funny though. I don't know why.
Say you worked at Wiener Schnitzel.
Dude, I can't even say
Wiener! Scott.
He said wiener.
For 2 years, and then you went to Walmart, and you just started, and you just collected your first check. We can do it. So 2 year history, first check.
Dude, why does this guy go from Wiener Schnitzel to Walmart? Is that an upgrade, a sideways, or down?
I don't know.
Dude, I don't know either, dude.
They're out there
Well,
in the world.
you picked Wiener Schnitzel. You could have picked In-N-Out Burger. You could have picked Burger King. You could have picked McDonald's. You picked Wiener Schnitzel. Why?
I could have chose the Chris and Lee team.
You could have chose the Chris and Lee team.
I could have chose Yeti.
Dude, we get a lot of people who are saying, "Hey, can you come? How do I come and work for you guys?" I'm like, "Well, first be a loan officer and then make a whole bunch of money and then come and give it to us?
Ta-da! Kia, how accurate
Ta-da.
or off is Credit Karma? Well, for credit cards, probably decently accurate.
Yeah.
But for mortgages, probably almost never. Almost. Sometimes it's been spot on, and that's like one out of a lot.
Yeah.
But most of the time, not.
That's
but
like
good.
Zillow for your appraisal.
It is good for monitoring your credit. I'll say that. I'm not going to knock on them at all. It's great for monitoring credit, and they give you opportunities for credit cards.
Yeah.
It's pretty cool stuff.
Yeah. It's like, how good is McDonald's for health food? Dude, silence. I hate silence.
None, not
Right, cool.
zero.
Yeah.
Actually, new podcast I want to refer you to for on nutrition. So it's a
Oh,
good
tell
one.
me. Okay, go.
It's the latest on Rogan, Joe Rogan.
Oh.
I forget the guy's name, but he actually is he's pushing the carnivore diet, and he's reversing a lot of people's real medical issues that they
Okay.
couldn't solve with medicine.
So do you want to go off on a little bit of tangent
Yeah,
here?
give us a second, guys.
You're
We're gonna go this way.
Go off on a tangent. You're gonna love the tangent. 5.75 rates. If you're here for the rates, it's 5.75 on the New American Funding website right now. We might be able to do better. 5.75, but we're gonna go off on a tangent. Okay. So first off, do you know what the population of? Let's go with America is. Do you know what the population of America is?
Like 330.
340. Yeah, about 340 million people. 340 million people. Do you know what the population of the globe is?
I think it's like 7.86 billion.
That's pretty good, man. It's right at 8 billion.
I counted
most
it this
people,
morning.
You counted it? You're like, everybody raise your hand if you're alive. So, so 8 billion people. So now you have to think about this. Let's say that we know there's 8 billion people and we can actually track the ascent. It's going to go to 9 billion, 10 billion, 11 billion, 12 billion, and then it's going to come down. I think that's the number. Well, there's not enough cows to feed everybody. There's not enough livestock to feed everybody.
How do you know that?
So we'll get to it in a second.
I'm gonna rebuttal this.
I gotta rebuttal this. Okay, so there's not enough livestock to feed everybody. So let's just say you're one of the guys at the top going, okay, there's going to be a problem.
Everyone talks like that at the
Yeah,
top.
I know.
Son of
Like,
a-
there's going to be a problem here in the
They
future.
all talk like a
Yeah.
not perfect Sean Connery.
All right. So they're like, there's going to be a problem here. What do? Let's convince them they need to no longer eat meat. Let's convince them the meat is bad for them. You like that?
Yeah.
So now, how do we do it? Oh, that's easy. Let's give them social media, and we'll have a bunch of pretty people come out and say, I'm vegan. I'm vegetarian. So now all these people come out and they're like, hey, I want to be like that pretty person. And then Brad Pitts of the world, and who's a supermodel nowadays? Margot Robbie's.
Who is the
The Margot
supermodel?
Robbies of the world come
Who's
out
the
and go,
supermodel today, guys?
I don't know who the supermodel is. Who's a supermodel? Anyway, so they come out and they say, hey, let's just convince them that eating meat is bad. You know what? Only meat grown in a factory is good, in a petri dish is good for you. Yes, let's go
Fake
with
meat?
that. Beyond meat. We can't sell fake meat. What if it's better than meat? We'll call it beyond meat. So
Better than meat?
If you
How's that?
if you figure that stuff out,
Yeah, that's good enough.
so if you figure that stuff out, then how do you convince them? With a bunch of pretty people telling them that eating meat is bad. All right, go back to what you're saying.
Well, but here's how it comes out initially. So that pretty person comes out and says, yeah, I'm vegan because I have this ailment and I'm allergic to this, so this is the best solution for me. It's not that's for that person. It's not a fix-all for everyone, but 95% of the planet eats meat. So if 95% of the planet eats meat, why is 95% of the planet not sick? Follow that?
Oh, yeah.
And they're trying to say that it's the reason for cancer and all these other things. But let me share this with you.
Tell me.
Do you know who the largest producer of cows are
Cows' moms?
in the world?
Cows' moms?
Okay. The country that has the most amount of cattle. Let's put it that way.
India.
Okay. Do you know that?
Am I right?
Yeah.
Am I right? Okay.
Yes. Did you know that India is the country where they actually look at cows as being sacred,
No.
and they have the most amount of cows
That's because they don't kill them.
for slaughter. They do. They export the meat. So it's not theirs necessarily. So they raise it, they have the most of it, and they export
Dude,
it.
I'm about to get banned because I'm going to say, hey, wait a minute. So they worship it?
Yes.
And then they say, hey, we love you.
Yes?
Go to America for a little while.
Yes. No.
We can rent this place out. Yeah.
Now go to America.
We can rent this. Don't do that, man.
Now go to
We're gonna
America.
get banned again. Every time we get
How do you
banned.
kill a cow?
I don't know. We can't talk about that stuff, though. Hey, in case we get bad boy, we're going to be... Anyway, So back to this. Self-employed.
Self-employed.
How many tax years do I need? Simple. 2. Right?
Yep.
Zip. Just 2. Just 2.
Biden-Harris 2020?
No. What are you talking
Hold
about?
on, let's ask the question. What happens if my mom died and she has senior exemptions on her loan on making the payments now?
If my mom died and she had senior exemptions on the loan.
Like
Okay.
Oh, like taxes?
So, I'm going to say, we're in 2023. Maybe they know better by now. Anyway, so here's the thing. The loan is taken out by a person, and that person is liable for the loan. When they pass, that person is no longer alive, and there's a due on sale clause. Uh-oh. What are you guys talking about? Emlo's in the house.
She's over there.
Is that Facebook or
Yeah,
Instagram?
it's Facebook.
Okay. Emlo, what's up? Anyway, so there's going to be a grace period, where as soon as you let the bank know, and if you don't let them know, they're going to find out anyway, because death certificates are public information, and there are parts of the bank that comb public data to find it. And sooner or later, they will find it. When they find it, they're going to give you an option. They're going to say, hey, you might be able to assume this loan. That happens sometimes. You might be able to refinance this loan. But the person that was liable for this loan is no longer with us. And because they're no longer with us, we have to deal with the debt somehow. If you don't deal with it, they'll foreclose. They'll just come in, take the house, get their money back, and give to the estate whoever or whatever's left. Does that help?
Yep. Natalie said Credit Karma is like Zillow. Yes!
Yes, it is. They're cute. They're kind of cool. But you really don't want to count on them. Yeah, it's not a good thing.
Sin Marie, credit 640, make about 65 a year, very little debt, no car payments. How much can I get approved for?
So, Sin Marie, I got great news for you. Great news for you. Great news for you. So, if you had asked that question 2 weeks ago, the answer with confidence would have been $245,000. 2 weeks ago. But this morning, rates came in lower than they've been in a year and a half. They came in, I told Chris is pulling up the rates this morning. I said, hey, dude, are they 6.125 again? And he says, no, dude, we're in the 5s. And I'm like, dude, we cracked 5.99? He says, no, lower. And I said, 5.875? And he goes, lower. And I get, no way. He goes, yeah, we're at 5.75. Now, what that means in the lending business, it's a lot of teeth in the lending business. Because what I would have told you 2 weeks ago, you could buy $245,000 right now. You're probably 430 to 510. Some things I have to factor, but 430,000 to 510, somewhere in that range. Crazy.
I think we need a commercial.
Crazy. Okay, if you need a badass loan, call a badass loan officer at the number on the screen here. Just screenshot it, and remember, you've only got 5 seconds. 4, 3, 2, 1. Now, back to our regularly scheduled programming. I got that down, man.
We're back.
Yeah, what's up? We're back. Okay, where you guys at? 281 wants to know where you're at. Chris is right there, and I'm right here. Cool. Next.
Where are you guys located?
Where you guys located? Where you at? Well, he's located right there, and I'm located right here. We're in Riverside, California. We do business in all states except New York.
Okay, let me share this with you guys,
Okay,
because
share.
I just had this thought.
Okay, good.
So we get asked that question every day. Where are you guys at? Where are you guys at? Where are you guys at? So we are in SoCal. Okay, that's fine. It's not a big deal. But know this, guys, because I know there's a lot of hesitation out there because of yeah, that is weird. You know, because of people want to see people face to face. But know this. Probably 95% of our loans are done without us even seeing or meeting a person.
Yeah, we want to.
Yes,
we
100%.
I prefer to sit across from somebody
100%.
and help them go. We got somebody on TikTok probably 6 months ago. She walked into our doors. She's like, hey, I saw you on TikTok. My husband doesn't think I can buy. We went through this. It was a long, drawn-out process. She wasn't immediately ready. But in about 4 months, she was ready. 6 months, she's in a house. It all started because she saw us on TikTok, but walked in because she didn't believe we were real. And it's weird. We get starstruck every once in a while. People are like, "Oh, dude, you exactly like you are on the TV or the YouTube or the TikTok or the whatever."
People walk up to me when I'm out and about.
Yeah,
Literally, they're like,
"You're Chris,"
and I'm like, "Yes,
yes,
for 42 years,
so far, so far,
I'm still Chris."
Cool. But 5.75. Barbara Corcoran came out about 6 months ago and says, "Hey, once interest rates have anything with the 5 in front of it, there's going to be a drove of applications," and there are. Our applications are going through the roof. So you can apply with us pretty easy. You can call us. We'll help you. You can go to it's on Instagram. No, it's on all of them. If you go to the top of the profile and you click the Stand Store, there's a link there to apply for, and you can do everything electronically for those of you who don't like to talk to people. I don't know why. That's not my world. But if you don't like to talk to people, all you have to do is go to the top of the profile and apply for a loan. We will gather all your documents. You'll probably talk with Martha first, our LOA, loan officer assistant, and she'll make sure you're qualified. Then it gets put in front of Chris and I, and they say, "Hey, this person, John Doe, submitted everything, and they're good to go. Can you please give them a call?" So we just, "Hey, John Doe, yeah, you've seen us on TikTok or Instagram or Facebook or YouTube or one of those things. And great news, you're going shopping. Do you need a realtor?" We always ask that, right?
Yep.
And then John Doe will say, "Why, yes, I need a realtor." Or, my favorite, "No, I don't need a realtor."
Did you almost die?
I almost died.
Again? All right, guys, don't forget to follow us on all platforms because sometimes platforms are not so happy with us. So follow us on all of them because you want to be able to view these. We multicast to
Dude, that's a big word.
all platforms on every single one of these that you guys see.
Say Wiener Schnitzel again.
Wiener
Schnitzel.
Schnitzel. It used to be called something else. What was it called back in the day?
I don't know. Der Wiener Schnitzel was der. Yeah, it was der, like German.
Is der like the?
I don't know, man. I don't speak German. Dude.
Like der?
Oh, dude. Uh-oh. Look out. You got somebody. Does Chris love Latinas?
Do I?
Dude, we get so much weird.
Do I?
We get so much weird stuff.
Dude, is that interest
That's
rate national for
media.
30-year fixed?
National. Is it national? It is national. International.
No, not in Mexico.
Hydroponic. Why it's grease lightning?
Hydroponic.
Why it's grease lightning?
Why it's
Yeah,
pneumatic,
it's a 15-year. It's a
supermatic.
15-year and a 30-year FHA fixed and VA right now. So 30-year fixed 5.75. 5.75. 281 followed the host. I appreciate you. What do we got over there?
I don't know. All kinds of stuff. Guys, we have so many social media things open
Yeah.
that we're trying to keep up with everyone.
We try and
answer
keep
your
up with
questions.
everybody.
Please
If
don't
we
get mad
see
at us.
something, let's see what we got.
What you can do is you can text us directly,
Yep, you can check us directly.
and we can have a conversation one-on-one instead of being in front of all these millions and millions of viewers.
Dude, sometimes we burn up the internet lines because we got so many viewers.
Internet called me yesterday.
They're like, "Hey,
listen,
you
slow
gotta back
down.
off. You gotta back off, dude.
Slow down,
You got
Chris
too
and Lee."
many viewers. You gotta back off." Every time I see these pretty girls go live, I'm like, "Holy smokes! You have 3,000 viewers right now. 3,000
In 30 seconds?
In 30 seconds?
Don't these guys have jobs?
And I'm like, "Yeah, Chris and I don't have that. All we do is give advice. That's it."
There's a baby outside that door.
I wonder if
OKC here. What's OKC?
Oakland City.
Oh, Oakland City.
No, it's not.
Oklahoma
I
City?
don't know. Oklahoma City. Oklahoma City. Have you guys heard Loan Care hacked? Ooh. Well, I can tell you, Alex. Here's the big one.
Oklahoma City.
Oklahoma City in the house.
What's up, Courtney?
Mr. Cooper got hacked. Mr. Cooper, and there's a class action lawsuit right now, happening right now. They got hacked in October. They didn't tell anybody. Mr. Cooper is probably the largest servicer in the country. They have, I think, 3 or 4 million loans. They got hacked.
Man.
That's a big deal. Now, the class action is going, "Wait a minute, you guys didn't even tell us you got hacked." So, there's a class action going on. Yes, we do know there's a lot of people get hacked. Yeah.
Nadine's watching from work.
Nadine, we appreciate you, but I won't tell your boss. I won't
And
tell
if you want to apply for a loan without even talking to
Hold
us,
on.
go to TikTok, go to the link up top, and you can apply for a loan without your boss even knowing.
Nadine doesn't work for us, right?
No.
Okay, good. Because I would be very mad right now. I'd be like, what are you doing? You should be processing loans.
I'm watching you from my desk.
No, you should be processing loans. What's your... Okay, good.
User 1224 from Texas.
Texas 122. Hey, my primary residence is in Texas. Secondary residence, California. Love Texas. California's okay.
Courtney Dawn, I'm trying to buy my first house this February. What you got to do, Lee?
What you got to do, you got to call a badass loan officer. Here comes the commercial. Ready? If you need a badass loan, call a badass loan officer at Chris and Lee. That's the number. Okay, bye. Oh, that was it.
E-Man,
Whatever.
Where to get that class action?
There's this thing. It's pretty new. It's called Google. If you open up Google and you put in class action, then you put in Mr. Cooper, October 23, there'll be a lot of things coming up. It's going to get more and more important.
Google, you say?
Yeah, Google.
That's how I did my last surgery.
Yep, you Googled your last surgery?
Do you service Oklahoma?
You're almost there. Do we service Oklahoma? Yes, we love Oklahoma.
O-Town.
Love Oklahoma. Everywhere except New York. We actually love New York. We can't do loans. It's not it's New American Funding that said we can't. It's not
not
me.
us.
I'd rather do it. Yeah, I'd rather
They
do
didn't have a
loans.
meeting with us.
Yeah.
They just told us.
Yep. If
I-
I buy, go ahead.
If I buy an overpriced house and the market crashes, do I have to put more down if I lose 20%? So here's how it works. Okay, just giving you a quick example. So let's just say you buy a house for $500,000.
We're loan officers,
You put 20% down. Okay, so you put $100,000 down. So that house is worth $500,000.
right?
Now the house drops to $475,000. You just keep making a mortgage payment. Just keep making a mortgage payment, and what's going to slowly happen is the value is going to come back when everything corrects. It always does. The biggest crash in my lifetime was in 2008. Values dropped over 50%.
50%.
And those that kept their property, pay attention, those that kept their property and made their mortgage payments have a boatload of equity today. A boatload.
Yep.
Boatload.
Today.
Are you one of those?
5.75.
Say yes.
Yes, I did. Yes, I kept my. I had houses, and when it crashed, I was like, just buckle down and pay.
Keep making a
payment.
payment.
Pay. It actually went upside down, and then came back on. Yes, I have a boatload of equity.
And you don't have to put more money in. Just keep
Yep.
making a mortgage
Yep.
payment. FSH
What do we do?
loans?
We're loan officers. We help people buy houses. Interest rates have gone down to the lowest point in about a year and a half. 5.75% on the New American Funding website right now.
FHA loans, Courtney. FHA. I think that's what you're trying to say. FHA. What do you guys suggest for getting taxes up to date if behind a couple of years, says Hawaiian Fire. Hey, Hawaiian Fire. I don't know if you're in Hawaii, but we just can do loans in Hawaii recently.
Yeah, recently. We used to not be able to, and then we got notified. Our manager went on. He said, hey, I caught your live. You're not right on the we can't do loans in Hawaii part. We can. And I said, really? When? Last month. Didn't you get the memo? I'm like, I must have missed it, but I'm really glad because I'm going to tell everybody we can do loans in Hawaii. If you're behind on taxes, first thing you need is a great accountant. CPA, accountant, one of those two.
Every one of these is an important job, guys. So
Yeah.
your loan guy
Yeah.
is important. Your tax guy is
Yeah.
important. Your agent is important.
Yeah.
Even your bug guy is important. I'm going to share this with you guys because I'm very upset about it. I have a rat in my garage.
Like somebody who told on you and went to jail?
He's like hiding in there.
He's like,
No,
he
like
ratted you out when you were
Cheese
like cheese?
rat.
Like rat does cheese.
He's probably not going to be there when I get home, though.
What?
Yeah.
No. Did you go like scorched earth on a rat?
Hey, man. I'm trying to address Hawaiian Fire right now.
All right.
So did you give advice on getting the taxes?
Yes, you need a good CPA. If you don't have one, just call us. We'll help you out. Even if you're behind, we want to know how far behind, and it's not an uncommon thing. We run into it a lot. We actually have connections with CPAs, accountants all over the place. We have realtors who are always hitting us up saying, hey, will you recommend us? I'll be like, yeah, once I know you're good. I get signing agents like every day. They're like, hey, just promote me. I'm like, hey, talk to me first. Tell me why. I'm not just going to give you my clients because you exist. We need to have a bit of a relationship. I need to know that you can actually do your job. I need to know that you're good before I put my name behind yours.
Courtney Dawn, FHA. Yes, we do those all day long,
we
every
have a
day.
bunch of them. Yeah, we think we have 9 of them in the back here. 9 FHA loans.
We've got 9 left, guys.
Yeah, we got 9 for today. Yes, we do FHA loans.
Do you refinance Double wide in Texas.
User 122.
Texas.
Texas. We love Texas.
T-Town.
So maybe. It depends on. There's some special rules in Texas. Special rules. Did you know you couldn't do cash out refi for a long time in Texas? It's crazy, but you couldn't. They recently have changed that. But the rules are usually has to be double wide, but can now be single wide. Has to be attached to the ground. Has to be 1979 or newer, right?
76.
76. 76 or
June
newer.
76.
June of 76 or newer. Oh, here we go.
Lee will.
Yeah. To provide loans, user 506. I think that's.
I'll do a loan
TZ,
for
man.
anyone. I'll do a loan for
I
anyone.
think that's TZ.
I want everyone to be a homeowner.
I'm pretty sure if he's got the thing for it. He's
Maybe.
probably sitting back there
Is
laughing.
it easy to get a loan to build a home in incorporated land? So when you say build and easy in the same sentence,
Yeah, it's not.
they don't go together.
Yeah, that's like jumbo shrimp.
They don't go together.
Well, they do,
Oxymoron.
Did you call me a Nazi moron?
Nazi moron. This guy right here. So easy. If you have a lot of money, you can solve
It's
a lot
still
of
not
problems.
easy. No,
you can
it's
solve a
not
lot of
easy.
problems.
No. I built a house cash once. It was not easy. It was a nightmare. It was because when the contractor comes in and says, "Hey, it will be this, double it." Just I don't care what they say, double it. And they'll have good reasons, and then you have to make very difficult decisions when you're too deep in to not do it anymore.
I hate making difficult decisions.
Decisions, dude. I make decisions all the time.
All right, dude, we got to wrap.
I do decisions all the time. Okay, dude, we got to go do loans.
One more.
Okay.
Tony. One more for Tony.
Okay, Tony, like Tony Stark.
Like Tony.
Dude, when I found out that Tony was all dudes, I was mad.
When you found it feels good.
Yeah, I know.
Yeah.
Tony's all, I'm like, they're all named Tony. That's cool. Wait, they're all guys. Never mind.
Can you get an FHA loan after you just got one 2 years in? Okay, real quick.
Tony.
You can sell that house, get another FHA. Sell that house, get another FHA. Over and over and over and over again. Can you have them at the same time? There are specific rules. And if you want to do that, I'm going to ask you to give us a call because we got to go.
Most of the time, no, but sometimes yes. Does that answer your question?
I'm trying to get him to call us, man.
Call us. What's the problem? Call us. We've been Chris and Lee. We appreciate you. We'll be live again later. Have a good day.